Hey everyone, Tesla's stock price has had a phenomenal year in 2023. Indeed, Tesla stock is up 94% year to date as of this recording. But is Tesla stock a buy for 2024? That's the question I'm going to answer in this video. Considering all of the macroeconomic pressures, the forecasts, the Cybertruck, the valuation, and all of those major factors that influence Tesla stock, I'm going to consider that and come up with the conclusion to answer whether or not I think you should buy Tesla stock heading into 2024. So without further ado, let's take a look at those critical financial metrics right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So as I mentioned earlier, Tesla's stock price has had a phenomenal year in 2023. But interestingly, Tesla's business has not had a phenomenal year in 2023. Remember, the year has been full of interest rate increases, making it harder for consumers to purchase electric vehicles. Simultaneously, Tesla started a price war in electric vehicles, lowering prices across all of its models, which decreased profit margins, which we will look at in the following slides, and all of which in the backdrop of increasing macroeconomic uncertainty with slowing economic growth, while competitors entered the industry and increased supply of electric vehicles. So the foundation on the business was not great in 2023, but the stock price still increased by 94%. Now, that's been a common theme with Tesla stock in that it's sometimes disconnected from the actual performance of the business. And that's the case because Tesla's such a popular stock, many investors are willing to ignore those difficult financial metrics and purchase Tesla stock because of some future potential in 10 years from now, driverless technology, and all of those factors. But let's look at revenue right here. And you can see Tesla's revenue had grown very nicely. 2020, the pandemic was great for Tesla's business because competitors, they faced supply chain shortages and there was a limited number of vehicles out there to buy. And so consumers looked at Tesla's cars and said, well, they're available. Let's go ahead and buy them because we can't find many other cars available. And that was great for Tesla. It boosted revenue. You can see here from, less than 8 billion all the way up to 24, 25 billion in quarterly revenue. But now, since economic reopening has gained momentum, supply chain constraints are easing, supply of vehicles is increasing, Tesla's finding a harder time delivering growth. In fact, in the most recent quarter, vehicle revenue barely increased by less than double digits. The forecast for 2024 is for Tesla to produce 2.3 million vehicles. That would be up by roughly 28% from the 1.8 million they're forecasted to produce in 2023. Additionally, in 2024, the average selling price is likely to be lower, considering all of the price cuts that Tesla has done in 2023. So it remains to be seen if revenue will be higher, or by how much will revenue even be higher if it is higher in 2024. The Cybertruck is coming out, but I've done a video on that highlighting how the Cybertruck is not going to be a meaningful contributor to Tesla in 2024. If you want more details on that, I have a whole video which I will link to at the end of this one for you to see for yourself how the Cybertruck is not going to be a meaningful contributor to Tesla in 2024. I mentioned earlier that profit margins were coming down because of the price cutting, and you can see that here with Tesla, with the gross profit margin peaking at around 29% in 2022, and it's been on a straight downward path here, 19.81% in the most recent quarter. I wouldn't be surprised if this continues to move lower over the next few quarters as those price cuts really start to play into the overall profitability. And the Cybertruck's inclusion, remember, it's a new vehicle. It has yet to reach economies in scale. So the gross profit margin on those vehicles are going to be lower, although the total unit sales will be smaller. Still, the impact for the company's overall gross profit margin will be negative from the Cybertruck, at least in the first 2 quarters of 2024, in my estimation. Now, I've also highlighted here Ford, General Motors, and Stellantis and their gross profit margin. And you can see Stellantis NV at 20% is higher than Tesla. Ford and GM are right about where Tesla is, 14% and 12.7%, about 6 and 7% lower than Tesla in terms of gross profit margin. But that lead is shrinking. That lead was much wider for Tesla in 2021 and 2022. But again, that was temporary due to those supply chain shortages. You could see going back, there was a lot of fluctuation in profitability, and Tesla has been the leader in terms of electric vehicles and gross profit margin in electric vehicles. It is the best in class EV producer overall. The next thing I wanted to look at is Tesla's operating profit margin, and you can see Tesla delivering excellent economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. And so look at the operating profit margin rising from around negative 24% in 2016 all the way up to around 19% at the peak, and it's now fallen to 11.2%, around the middle of the pack here, with Stellantis in the lead at 12.5% and Ford and GM a little bit lower at 8 and 6%. But I wouldn't be surprised if Tesla's operating profit margin also falls for the first 2 quarters in 2024 before rebounding in the back half of the year. Tesla has also done a phenomenal job in increasing its cash flow from operations. The company for several years was in a cash crunch, always struggling with money, always being short of cash, needing to go to investors and raise more capital, sell more stock. That's over. Tesla is now in a position where it's generating strong cash flow from operations, $12 billion in the most recent trailing 12 months. It does not need to go back to investors anymore. It can, if it wants to, opportunistically, but it doesn't need to. And that's a great move for Tesla to finally turn that corner to be cash flow positive, to be a self-sustaining business. And that's really good news for Tesla stock investors, and certainly a positive heading into 2024 and beyond. Tesla also has a strong balance sheet now because of that strong cash flow from operations it started to generate around 2020. It now has $16 billion in cash and only $3.7 billion in debt. It's in a strong cash position. Like I mentioned earlier, it doesn't need to go back to investors to ask for more money. But if it finds an opportunity where interest rates are really low and it can raise money cheaply, it could do so opportunistically. And that's a good position to be in, to have that option, but never to be desperate to go to capital markets, because then you have to pay higher prices to get that money. Tesla's not in that position anymore. It used to be before 2020, oftentimes in that position. No more is it in that position. It's in a great financial position right now. Finally, I wanted to look at valuation, and Tesla stock is trading at a forward price to earnings around 60. And I've also brought in here Ford, GM, and Stellantis, and we looked at their gross profit margin and operating profit margin as well. And you could see Tesla stock is more than 10 times as expensive as these others. Ford at 6.183, GM at 4.47, and Stellantis at 4.05. And I showed you that Tesla's performance is better for the most part than Ford and GM, but worse than Stellantis in a couple of metrics. And even though, yes, it is the best in class, we didn't see, at least from the metrics that we considered, we didn't see Tesla being that much better than Ford, GM, and Stellantis. So a lot of Tesla's valuation is not from what it's done so far, but there's a lot of prospect valuation in Tesla. There's a lot of hope. There's a lot of enthusiasm. There's a lot of positive sentiment. There's prospects. There's forecasts of Tesla's stock price increasing by more than 10x by 2030 by some enthusiast investors. And so, yes, Tesla does have excellent prospects in the future. It's investing in driverless car technology. Electric vehicles are growing faster than any other type of vehicle, and Tesla's one of the leaders in the electric vehicles, at least the leader in the US to be sure, and it's in a great position to capitalize from that growth. But how much of that is already priced into Tesla's valuation at a forward price to earnings of 60 compared to these other car makers that are at 1/10 of the valuation? So given the expensive valuation, if I was to answer if Tesla's stock is a buy for 2024, I would say no, it's not a buy. I would say it's closer to a hold. Now, at the same time, if you were to ask me, do I think Tesla's stock price is going to be higher in 2024? I would say, yeah, it's probably going to be higher at the end of 2024 than it is as of this recording. You might say, well, what do you mean? You're telling me that the stock is not a buy, but at the same time, you're telling me that the stock price is going to be higher by the end of the year? And listen to my reasoning here. Yes, the stock price could be higher by the end of the year, but I don't think it's going to be higher enough to compensate you for the risk you will be taking in investing in Tesla stock. After all, you could buy government bonds that will give you at or above 5% yield on your money, 5% return on your money for almost zero risk. So you can get 5% for almost zero risk, or you could go into Tesla stock, which I think will be higher by the end of the year, but I'm not sure if it will be higher by more than 5%. And on top of that, you're taking so much risk with Tesla stock. There's a chance that it might fall by 40% or increase by 80%. It's a volatile investment. And if I'm taking risk, I want to be compensated for that risk. I consider risk as an important feature when I'm recommending a stock. And so for those reasons, I would say that Tesla stock is not a buy for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.